Welcome, everyone, to the Conquer the Chaos podcast. I'm your host, Clate Mask, co-founder and CEO of Keep. And I am excited to welcome Justin Gray to the podcast today to discuss his unique approach to entrepreneurship and leadership, as well as the pivot that he made from consultancy owner to a startup investor, which is pretty cool, and lots of great advice that he can share with us. So welcome, Justin. Thanks so much for being with us.
Thank you. Appreciate the invite, and I'll try not to bring too much chaos to your pod.
All right, we will definitely have fun together. So I gotta just share with everybody. Justin and I, our companies they go way back because Justin is based here in Arizona, and he created a company which he'll tell you about in just a second called LeadMD, which is really a marketing consultancy for. That does marketing automation and provides services to businesses. They're a little bit bigger than those that we serve at Keep, but we always had, because we were kind of both in the marketing automation space, we had some overlaps, some team members that we shared and that crossed paths at times. And so I'm really excited to have this conversation with Justin. He's an awesome entrepreneur. I'd call him a serial entrepreneur. And I think y'all are going to learn a lot from him. So Justin, why don't you give the audience just a little bit of a background on you and LeadMD and who you are as an entrepreneur?
Yeah, I had a very traditional background that turned into a non-traditional one. So I went to school for marketing, unlike a lot of marketers out there, which is not a knock whatsoever. There just isn't a lot of great marketing education. I probably have never used much of mine. Got a bunch of boring jobs that I hated, and then stumbled across what we would now call startups. And just kind of found my place in the world. Definitely was kind of what I was looking for. So was fortunate to join a great company like 2006 type time frame, help them grow and scale from really zero to $250 million. Had an equity exit, sweat equity exit that I had earned there. Went out and started a host of companies. LeadMD was one of those. We initially started, as you mentioned, in the marketing automation space before people really knew what that thing even was.
Yeah.
We partnered with Marketo for a while. We did some Infusionsoft services, which was the Keep banner back then, and then eventually expanded that organization to pretty much any major sales and marketing technology, into branding, into campaign strategy, into analytics, really, anything central to the digital marketing function, we did it. And then ultimately had an exit for that business in 2021 when I sold it to private equity.
Awesome. Well, like you said, you've founded many companies, and I think that for our listeners, the path that you've had is really interesting because not only have you started many companies, but you built one up to roughly 20 million or so, and then went through a sale to private equity. And I think for our listeners, we'll probably spend less time on the sale and the private equity aspect, although we'll touch on that a little bit, and a little bit more on what you've begun to do now as an entrepreneur, having that experience as an operator and seeing different businesses and what needs to happen in order to get through that critical growth stage. But
Yep.
Also, just as an advisor, you now as an advisor, a consultant, you see where businesses sometimes get stuck. And so why don't you've got this advisory company now where you invest in companies called In Revenue Capital.
Yep.
Tell us what you do in that role that's relevant for our, small businesses that maybe they're not even looking for capital. We're not going to spend a ton of time on that, but I think there's a critical thing that needs to happen early on in order for that business to be successful that an investor is looking at, or that a lifestyle entrepreneur wants to achieve their goals and dreams. And what common things do you see in those early stages of businesses where entrepreneurs get stuck?
Yeah, so I mean, we started in revenue to address that acute pain, which in my opinion is the ability to really put process behind and scale sales, right? Beyond from just being kind of this hero motion, which is where a lot of businesses get stuck or don't even get to that point to where, you need to take a product, service, something, a widget to market, and you need to figure out how to do that in a way that's repeatable, right?
Yeah.
And so ultimately in revenue, is a venture capital organization, but fundamentally it's a consultancy. It's an advisory. Like every time we cut a check into a seed stage organization, we bring our go-to-market expertise, deep into that business, and not just from a, hey, we'll have a monthly meeting type perspective, like from a really like roll up your sleeves. Where does the business need help? And to your point, oftentimes it's around they've been founder led selling, or they've been a single person kind of rodeo. How do I now build a team? How do I create processes around that? How do I build a tech stack to support this? How do I do this in an intentional manner that I can start to forecast and predict revenue based on that repeatability? And that's squarely where we're focused on helping getting our founders to.
Yeah, I love that, and having a scalable sales function in your business that can actually grow and doesn't depend on the business owner is critical. Well, we're going to talk a little more about in revenue and how your company looks at putting capital into businesses in a different way than most venture capitalists do. But I want to kind of start from the foundation, because most of our listeners don't want to raise capital. They have no, that's not their plan, and that's great. This episode of Conquer the Chaos podcast is not about trying to change people's mind about raising capital. It is about the foundation of sales that is necessary for any business to be successful. And whether you're looking at as an investor, or the business owner is trying to get out of the chaos of those early stages, getting the sales function working is probably the most common problem I hear among entrepreneurs, whether they are lifestyle entrepreneurs, or have ambitions of ultimately raising capital and building the business to a larger scale. So let's talk about that for a second, because I know that you've talked to me about an entrepreneur who can settle into that role of selling if needed.
Mm-hmm.
And some of our listeners don't really like that idea. They don't want to be the one selling. Others are finding themselves necessarily in that spot where they have to be the one selling, or the business isn't going to make it.
Sure.
Um, how would you help us think about that as entrepreneurs, so that sales becomes a successful part of the business, as opposed to kind of a necessary evil, which I see a lot of entrepreneurs thinking of it that way at times.
Yeah, yeah. So, I mean, first important disclaimer, right? Like, I have never taken venture capital in any business I've ever started. Every business I've sold, I was the sole owner of that organization, and so I get it. Like, if whether you want to go down a venture-backed route, or whether it's a bootstrapped, organic business, the unifying thread there is sales,
Yep.
regardless,
Yep.
right? And I think it's so important early stage for founders to understand that that is a critical skill set. Like, it is a profession, and yes, there are folks that focus solely on that as their profession, but as a founder, there's no better way to design a product. And I've actually got a friend who's building a company right now, and I think he's just giving a master class in how to build and grow a software organization, because they are literally designing that product based on feedback from their customers.
Mm-hmm.
And they've been so intentional about getting those design partners, selling into that process, as you mentioned, and staying close to that customer, and really designing something that's going to have proven value before they ever sign their first contract, or take in their first check. And
Yeah.
so stay that proximity to a customer, whether it's on the front end through customer acquisition, i.e. sales, or on the back end as you're managing that customer and listening to them and understanding what they're gleaning from that product or service. Like, that proximity is so critical.
Yeah, just staying super close to the customer, understanding what's valuable to the customer, and making sure you're delivering that. That's, whether you're doing software or services, or, whatever product you have, that understanding of what customers value is critical. Now, I talk all the time about the stages of small business and how they change on the ones and threes of revenue. And what I would say to what I say all the time to entrepreneurs is that if you are at less than 300,000 in sales, and you don't have someone who is taking whose primary responsibility is to sell, then you are prolonging the suffering in the chaos. You are going to stay there much longer until someone recognizes, and it's usually the business owner. Sometimes it's a partner, sometimes it's a first or second hire, but someone has to be primarily responsible. We all wear
Mm-hmm.
lots of hats at that stage of the business. So
Sure.
it's not like it's the only thing the person does, but someone's got to take that responsibility. And I see a lot of times there's a hesitation or a reluctance on the business owner's part to take that role. Um, why do you see when you were talking about the experience where you see a business owner that is successful because they take on that responsibility? Um, why is it that the business owner needs to take on that responsibility early in the business if employee one or two isn't doing it?
Yeah, well, I think first and foremost, like the concept of sales and selling has such a bad rap.
Mm-hmm.
Just, and this goes back to probably what we've all experienced at some point in our lives where we were sold in a way that we didn't like, right?
Mm-hmm.
Like it didn't feel good. We walked away not feeling like we got value. And that has become our primary perception of sales. And I think the best way to first, like if you haven't been sold in a great way, I apologize, but like at some point, like hopefully we've had that great experience as well. And that's really what I see successful founders patterning their go to market, their customer acquisition process behind. But ultimately it's how can I identify and provide value
Yeah.
to my ideal customer, right? And when you think about what's going on in the market these days, where most organizations are struggling more than ever before to sell, to acquire customers. There's some expansion of existing customers that oftentimes is making up revenue, predominantly the revenue expansion these days, right? We have to show more and more value up front before someone even becomes our customer
Yeah.
than ever before. And I think that's just, that buying trend is not going to discontinue. And
Mm-hmm.
so when founders are thinking about what do I need to do? Like first and foremost, like I'm a big advocate of founders participating heavily in sales to your point, like making it their primary charge for that like 0 to 100K, 150K, so on and so forth, to get that feedback and really to experience what that's like, what's landing, what's not. But at the ultimate, like we need to identify the customer pain that we solve. We need to understand what that is going to, what that benefit is going to look like. And we need to convey that across, one decision maker, multiple buying committee, whatever it is. We need to make sure that that message resonates and that it lands. And then ultimately that we fulfill that promise,
Yeah.
right? Like there's no better way to understand, like, do I have a viable product than participating in that process. So
It,
that's why I love it for early stage founders, just as one of, to your point, one of their core focuses.
yeah, I'm right there with you. And if you're listening to this and you're at under 300,000 and you're not very much involved in the sales process and finding that value that customers pay for, and then finding the joy of delivering that value, then
Mm-hmm.
the company's going to struggle. I'll just put it to you really bluntly. I see so many times entrepreneurs that want to believe there's a salesperson out there that's just going to magically go figure out the product market fit and start selling very effectively, and that usually doesn't happen without the founder being very involved. So if you're under
Or,
300,000, oh, go ahead.
or even that, there's this thing called sales that someone else can do
Yeah.
and that I can't do it, right? Like I
Yes.
hear that so often, like I don't know what sales is, or like it's this thing and it's so ethereal and so on. Like sales is just great discovery, it's relationship building, it's asking questions, it's being curious, and then it's understanding, is what I have going to solve for what you're experiencing,
Yep.
right? And that
Yep.
should feel really organic and shouldn't be this dirty thing of selling used cars that for some reason we so predominantly associate with sales.
Absolutely. So if you're out there and you've got a bit of a sales block, like some people have a math block, uh, I would encourage you to take what Justin just said and substitute value discovery for sales, because that's what it is. You're just discovering value. You're
Mm-hmm.
discovering it. You're helping the customer discover it, and then you're delivering that value. And it's a ton of fun as an entrepreneur to do that. And then once you get past that 300,000 and the sales start, or the business is starting to find that sweet spot, then you can get someone who all they do is focus on sales. And that's kind of the next step. Is you've got a person who just focuses on sales. Sometimes it turns into the founder, and the founder loves it so much that the founder will take on that primary responsibility and start to build up the sales function. Other time there's a salesperson that does it. And then you can do that from about 300,000 to $1 million. You can have a salesperson or two who really drive that. Once you get to a million, that's where you've got to really start to build a sales function the way that you
Yep.
described, Justin, at the beginning, where you have more of a scalable model and you've got people that you can plug into a sales process in order to drive the growth further. So let's talk about the function of we've talked a little bit about that early stage of sales. Now let's talk about it. You're starting to build a sales function where there's more than one person involved. This is where you're starting to grow the business from 300,000 to a million. How do you see entrepreneurs either making mistakes along that path or finding golden nuggets along that path that help them to
Sure.
get that business to seven figures?
Well, and that's why it's so important to be participatory in that early growth, right? Because ultimately, as you're creating a process, which is fundamental to scaling sales at this point, right? Like you have to treat all of those conversations, all that information that you've gathered as learnings. So, what is working? How does my, buyer think about their problem? What's important to them, right? Like all of those are inputs that ultimately we would refined down into what we call a sales playbook, right? Like how do we target these individuals? What's our overall ICP? What are the important segments below that? How do they come together within buying committees? Like if you sell to, more complex organizations, those might be large, less complex or smaller organizations. It may be one person,
Mm-hmm.
but all of those learnings are going to come to life. And really, what we're doing is transferring now those learnings into something that can really be followed. Like it's never just going to be a manual, but there is a process that we can build out of that are going to define everything from the stages in our sales process to what those critical inputs and outputs are at each stage, right?
Okay.
Like, what do I need to gather in order to progress someone along that sales funnel?
Yeah, I love it. And that's, you said we got to transfer all of those learnings into a process. So this is where if you're above 300,000 and you're not yet to a million, a lot of times it's because there is not a documented sales process yet. And you'll have a person who can sell pretty well. And sometimes that's the founder or one of one of the partners. Sometimes it's an employee, but too much of it is caught in their head and it's
Right.
stuck in their head. And so the ability to take all of that out of the salesperson's head and get it into a sales process is a really valuable skill. And a lot of times it's one that you need someone from the outside to come help you do that. We do this a lot of times with our customers, by the way, because they've never really put their sales process on paper. And so
Mm-hmm.
they hire Keep to help them automate their sales and marketing, but sometimes there's no process yet to automate. So we've got to pull that,
Right.
extract that out of their heads and say, okay, so what happens, and then what's next, and then what's next, and then what happens next in the process, and we get that down. Sounds like you've had a lot of experience working with entrepreneurs and helping them to do that. What to listeners who are maybe at that stage where they've got some sales going and they're the function's working, but it's one person. How would you advise them? What thoughts do you have about how they can get those learnings into a process that can be followed by multiple people running a sales process?
Yeah, I mean, I think the most important mentality to keep in mind is right. Like if something can go wrong, it will go wrong. And so the more granularity and just definition you can put behind, when we say sales playbook or sales process, it really is like what are the key milestones
Yes.
getting someone from awareness right down into a paying customer and even beyond that I have to walk someone through. How do they buy? And the most important thing to understand is what is my buyer's buying process?
There you go.
And then we're
Yeah.
going to map that sales process to, because nothing matters unless someone's buying, right? Like it's not what I want you to do, it's what you inherently do and how I can get you from one stage to the next to the point where like you are overjoyed and you're happy and you're excited about my solution because it's going to fundamentally solve a problem or provide a value that you're looking for. And so, the thing that we find that's just an epidemic out there, when we're doing diligence on deals and when we get under the hood, we'll be presented with, oftentimes a pipeline report. Most times that comes out of, some sort of CRM. And there's all these stages and obviously, weights and amounts and so on. And when you really get under the hood, everything is at the first stage. It doesn't matter if it's denoted, bottom of
Right.
pipeline. Where's this deal really at? Well, they saw the solution and we gave them pricing and we're waiting for a response, right? Like that is at the first stage of sales, right? They've committed to nothing in that process. And so when I talk about defining things, it's really, what do I have to do? What do I expect the customer to do? And I
Hmm.
can't go to the next stage in that process unless I've done both of those things, unless I've delivered my deliverables and I've gotten back from them that necessary commitment. And so it's just so important to think about that as a series of inputs and outputs. And then, ultimately down into the customer management process, right? Like, what am I promising? What am I delivering? And really think about those things in terms of actions. And then that makes it so much easier to manage a forecast, a sales pipeline, even sales talent, when you can put expectations down and say, oh, that's at the negotiation stage. Great. So we've given them contracts. We're expecting red lines from them, and the close date that we have in the system, we can rely on to a degree of 95% or better.
Yeah.
Unless you can make statements like that and everyone speaks the same language, everyone has the same degree of confidence, that's not really a sales process unless we can uphold those maxims.
Yeah, and I love, I mean, a key word there, milestones, the customer's journey, the process they're going through. We talk all the time about the 6 keys to success for entrepreneurs and how you conquer the chaos. And, key number 4 is strategy, and specifically around customer strategy. Well, what is the customer life cycle that
Mm-hmm.
you want people to go through when they're coming into your business? And a lot of times business owners, entrepreneurs just haven't taken the time to map that out. So we spend a lot of time helping them see those milestones and the next step that needs to happen, and then putting that into an automated process. But you can't
Mm-hmm.
automate it if it's not out of the
Right.
business owner's head and onto a process. And so I like the way you've described that. And of course, once you get a process in place, now you can have an employee work that process. You can have automation assist you in that process, but you're strategically, intentionally moving the customer through a buying process. And that's the age old line: if you don't have a selling process, you're at the mercy of your customers and what their whims are. And
Yep.
that's not necessarily a good way to calmly, confidently, predictably grow your business. You're left to the chaos there. So great stuff. Thanks for taking us through that. So tell me, I know one of the things that you've done when you work with businesses and you're advising entrepreneurs is you help them open up their eyes a little bit to the selling process, so that it's not just reliant upon the business and the business's lead generation, or maybe better said is, you help them see the market in a way that opens them up to partnering opportunities and growing their business through partnerships. Tell us a little bit about where you see entrepreneurs maybe missing opportunities when it comes to growing their business through partnerships.
Yeah, I think there's a tendency, and like you see this in marketers as well, quite a bit, where everyone thinks they're the center of the universe, and that's great. Like I
Mm-hmm.
love the the vigor that it takes to uphold that belief, but at the same time, you're looking to attract attention from people that may not be aware of you whatsoever, right? Like the reason I say marketers is everyone thinks like their website's the center of the universe. We just did a website revamp. It's like, great. Like, is
Nobody
anyone
knows.
spending their entire day on your website?
Right.
Like,
Right.
tell them why they need to be there, right? Same thing for a business, right? Like, especially again in the market conditions that we're operating in right now. Like when you think about how we make decisions in our personal lives, they're the same that we use to make decisions in business. And predominantly that comes in the form of trust through relationships,
Mm-hmm.
right? And so when you think about your ideal buyer, right, that individual has many trusted relationships out there. And so when we think about partnerships, which is one of the big levers that we actually need to pull within our business model, because if I want to operate concurrently in 12 different portfolio companies, I'm going to get spread pretty thin pretty quickly, even though we have a number of partners and we have a fairly large operating partner network. It's just not viable to say, like, I'm going to spend 40 hours a week in every single one of these businesses. Therefore, I need a scale strategy that can uphold that quality of conversation. It can uphold the value that we want to bring, but it can tap into what we call a cheat code. And that cheat code, by far, I believe the most effective is tapping into a co-selling process with partners that already have strong relationships with the same buyer that you're looking to get the attention of.
Okay,
And so,
let's dig a
yeah,
little deeper there. The cheat code, as you put it, is tapping into tapping into co-selling with a buyer or with a partner that already has your
that
buyers
trust.
in yeah, that trust. So let's
Mm-hmm.
talk about how to do that exactly. Because by the way, this is what you're sharing. I People sometimes say, "Hey, what's one lesson you learned in the early days?" I would say, and I say all the time, the fastest way to grow is with partners.
Mm-hmm.
And you're exactly right that the very rugged individualism that causes entrepreneurs to start a business in the first place also causes them to stay very insular and focusing on themselves as the center of the universe. And so we've
Right.
got to take that rugged individualism and go couple it with other entrepreneurs out there that already have the audience we're after.
Yeah.
How
So
does
it's a stronger together mentality, right?
yeah, yes, absolutely. So how do our listeners practically do that? How do they tap into this cheat code of co-selling, as you put it?
Yeah. So again, like as with all things, it starts with the customer, right? And so who is my ideal customer? Who are the buyers within that organization that I care about, that care about my product? Who in a potential ecosystem has relationships with that buyer
Yeah.
already, right? Who are they using? So I'll give you an example, right? Like we mentioned LeadMD and the consultancy that I started. Again, a small consultancy in Arizona that started out of my spare bedroom, like doesn't carry a lot of cachet in selling into large enterprise brands. And so I did this exact same thing. We started a partnership with several different organizations, but Marketo kind of really became our bedrock. Eventually sold to Adobe, right? Like large marketing automation success story.
Yep.
But we knew that all of their customers, really their best buyers, were our best buyer.
Hmm.
And our services were really complementary to what they provided. And so we knew that they already had the attention, they had the trust, someone had already made the decision to make a large investment within their platform.
Yep.
And we needed to gain that access, that trust, that authority, so that we could make their platform even more effective,
Hmm.
right? And so, it starts with identifying who are those relationships within your ideal buyer, and then really understanding what is the value I can provide twofold to that partner and jointly to the customer,
Yep.
right? Like we
Yep.
have to understand both of those things because yes, our solution's better together, but at the end of the day, most people care about their bottom line. What's it going to do for our organization? What's it going to do for our sellers? And so that joint value prop is super important. So, and if a ideal customer is using your solution and their solution, they should fundamentally be better together, right? And so we need to identify what that means. In our case, it was actually getting better ROI out of the investment they had made. Again, to your point earlier on, a lot of people buy marketing automation and don't really have a process to automate.
Yeah.
They don't really have some of that marketing expertise that system puts on steroids. And so the possible detractor is they're automating bad process, which is a big detractor for the business. So we don't want that to happen. So
So,
we know that we can provide this value to our joint
yeah.
customer. Yeah,
Yeah.
go
So
ahead.
let's dig in a little deeper on this because you said it. You said something I think is really important about the value for both the customer as well as the partner, and I
Mm-hmm.
want to touch on that. But your fundamental point was you got to make sure that you know how you complement the partner in a way that's going to serve the customer well.
Yes.
And I can hear, for I can totally see what you guys did for the customer that is seeking marketing automation success. They get the
Mm-hmm.
software from Marketo, but they need the services in order to get the most out of Marketo. So in our listeners' case, they're thinking, okay, what do I do well? Who's got an audience of customers that are my ideal audience, and how can I complement that partner so that we deliver a better solution for the customer? I think that's fundamentally that's where it starts. But the key that I've found in actually making the partnerships work is the the value to the partner, because the value
Yes.
to the customer
At
is
multiple levels.
yeah. So I want to dig in on that, because for our listeners, the value to the customer is where the entrepreneurs and the business owners' mind naturally goes. It's like they're already thinking that way about the way that they, for all the reasons we talked about at the beginning of the podcast, where they're trying to find value for the customer. And they get to the point when, when they're starting to look for partnerships, usually an entrepreneur's got a pretty good idea of who their target customer is and how they can deliver value for the customer. But the partner is the one that holds the keys to the kingdom in this case on whether or not we as entrepreneurs get to that customer. So
Mm-hmm.
um, maybe help us understand in your example, what value did you provide to Marketo, and on multiple levels, as you mentioned, if possible, so that the audience can think about, okay, well, what value can I provide to my partner, so that the partner will want to get me in front of their customers that I know I can deliver value for. Tell us about what you did for
Yeah.
Marketo.
Yeah. So to your point, absolutely critical, right? Like they are the gatekeeper to these relationships. And as I mentioned, this happens at multiple levels. Normally it starts at the business level. So if we're rewinding, going back 15 years now at this point, the main problem with marketing automation, and this still persists in some cases today, everyone thought it was a great idea. No one had any talent to run it,
Mm-hmm,
right? And
mm-hmm.
so really, when we started the business, our first offering was staff augmentation. You want to buy this tool, but you don't have an experienced digital marketer that thinks they can run it, or you don't have the content to power it, or your tech, the rest of your tech stack or your data is a mess,
So you'd
right?
provide
So
the
we
staff to help them get the most out of staff augmentation, meaning
exactly,
you basically have a part-time employee that would know how to run Marketo for them and
exactly.
be of value to the customer in that regard. And so you're providing some value to Marketo, because Marketo doesn't have the staff to provide to their customers that buy the software, and they know that the customer is going to get more from Marketo, and therefore the retention on Marketo will be stronger if the customer is able to get the services from an agency like yours at LeadMD.
Well, really, it was their largest sales objection, right? They had a ton of pipeline that loved the software, knew they needed to adopt it, wanted to buy it, but had placed this self-imposed barrier there. We need to hire for this individual, which
Yeah,
again, if we're talking 15 years ago, no one had the title marketing automation manager, no one
right.
had the title rev ops, right? Like these are all things that have been created by this space. And so it was a barrier that could have persisted for 12, 18, 24 months in
Yeah,
some cases,
yeah.
right? So immediate, and this is why LeadMD literally went from zero to $2 million in about 14, 15 months, because all of this pipeline was really just sitting there waiting to move across the finish line with the solution that we brought. But again, that was at the business level. So at the brass, and at that time, an awesome woman named Amy Carino had the foresight to say, yes, this makes sense. Let's start a services partner program. But even once we cross that gate, now you have to get into the headspace of every AE that is still a second layer gatekeeper there. They're not just going to do what the business tells them to do.
And the
They
AE
need to
are
see an inherent
the sales
value.
reps at Marketo.
That's right.
Yeah.
And so, we have to have a value prop to them as well. And the other interesting thing about selling marketing automation is, you're oftentimes selling to a CMO or someone that has a revenue target, and they want to know explicitly, what is this tool going to do for me? And so Marketo, even in the early days, had this value consulting motion because they're selling to large enterprise brands. But that value consulting motion was only assigned to like 7-figure plus deals, like large enterprises that could warrant that effort that it takes. They had abandoned these entire like mid-market segments, which is really our ideal customer profile. But their sellers did not get any of the support from their value engineering team. And so we were able to step in and actually fill that gap. Hey, we will help you assemble your business cases. We'll help you find a path to ROI. We'll help you spell out everything that a CMO needs to make a case to a CFO or a CEO. We will do that all for you. We want you to bring us in for the supporting services to implement and
Mm-hmm.
help run this solution long term. And that was a big win. And those value points evolved over time, which I think is another, you mentioned earlier, like everyone kind of sees this, partnerships can be a value, but they don't know where to start and so on. Like partnerships take a cultural investment across the board, meaning everyone should see the value in them. And then you have to maintain those relationships at multiple touch points. So if you're a smaller organization, that tends to be fairly easy. You're a solopreneur or a CEO, like you need to be in front of multiple layers of our organization at all times.
Yeah.
If you're a more complex organization, that goes down into different departments, but everyone has to fundamentally believe we are stronger together with this organization, because those value propositions are going to change over time. And certainly in the Marketo example, they did. They were acquired by Vista Equity and then ultimately Adobe. And every time they went through one of these, big inflection points, everything changed. And
Yeah.
we had to maintain that proximity to say, what is it now? What is the value that we need to provide?
And you talk about value at multiple levels for the partner. I think it's pretty clear the value you provide for the customer. You provided the value for the partner in terms of retention and better customer success, which mattered to Marketo. You talked about the
Mm-hmm.
sales reps, the AEs. What was the value that you provided to them? Did you create an incentive program? Did they get some sort of commission when they sold your services with the software when they sold to a customer?
Yeah, so again, multiple prongs here, but yes, right. But the most important value was they were being asked to actually, and this was our tagline, like, we speak CMO, we can help you speak CMO.
Okay,
They were being asked to put together these business cases, which, 24-year-old AE out of,
right.
first job out of college, probably not directly within their wheelhouse. So we were helping them overcome that objection, put something that could actually go in front of a board or a CEO, CMO, and have validity. But then to your point, yes, we created sales competitions. The number one referring reps would always get recognition. We took them to Napa, we took them to Lollapalooza, we took them to Tahoe skiing.
So
We
you
create
created
these
lots of
whole
incentive programs. Yeah.
correct. And probably the most important factor, we were in front of them almost on a daily basis. I told this story the other day, but for the first 2 years of LeadMD, people that worked at Marketo thought I worked at Marketo. That's
Mm-hmm.
how often I was in their offices. They're
Yeah.
in San Mateo, California. I literally, for 3 years, had an apartment in San Francisco because that's where I needed to be. I needed to be
Okay.
in front of what were really my customer.
All right, that's awesome stuff. So let's I'm going to drive home a few points here for our listeners because and they most of our audience is their small business is a little different than what you've described, but I don't want them to lose
Sure.
the principles.
Mm-hmm.
Principle number 1 is you've got to make the partnership good for the customer and good for the partner. Principle number 2 is that usually this breaks down when at the partner level where it's not good enough for the partner. And so you've talked about making it valuable on multiple levels for the partner. It's got to have a financial value. There's a communication and making them heroes in their role, the
Yep.
way you described, helping them speak CMO, quote unquote. There's a what I hear you describe is a almost an overinvestment in the partner that feels a little bit like you're giving away too much as the business owner. And this is what I want the
It's an
list.
investment.
Yeah,
Truly is an investment.
yes. And this is where I see it usually go wrong. The kind of referral programs or partner programs that I see our customers attempting to do, they go wrong because they are under investing in the partner. And I can't tell you how many times I've seen this where the business owner or our customer is saying, I'm giving away too much to the partner when I do this. That's how it feels. And what I want the
Mm-hmm.
audience to understand is this: it will feel like too much. If you create a very successful partner program, it's going to feel like you're giving away too much. So let me just give you a few rules of thumb to think about. Your sales expense should be around 10 to 15% of your revenue, and your marketing expense is going to be around 10 to 15% of your revenue. So if you're not at least parting with 25 to 30% in the sales and marketing through your partnership program, you are poor boying it. You're
Mm-hmm.
running it too cheaply. And you might say, well, I can't give away 30% on every deal. And my answer is, well, you won't. Because what will happen is you'll give it away on the deals that are successful. But in other cases, the word of mouth just gets out there and it starts to spread for you. And you don't have to pay 30% on every single deal, but you never get your program off the ground because you're evaluating it too tightly and you're not investing at the level that Justin just described. So
That
I think
cost
what
of
you've
sale
described,
will
Justin,
absolutely, yeah, that will snowball. I just want to mention, like, you will see that cost of sale diminish after you've
yes,
established a thriving partner ecosystem and partner program, because it will
that's right.
that value will absolutely just continue to grow.
That's right. I see it over and over in successful partner programs is they feel very rich at the front end, and over time it becomes one of the best and cheapest ways to acquire customers. So thanks for taking us deep in that. I know we went down the rabbit hole quite a bit on that, but it really is when entrepreneurs say, what's the fastest way for me to grow? It's partnerships. And
Hmm.
once you've established the value, understanding the value delivered to customers, the next best thing you can do is find who has your customers, and let's go create a really lucrative opportunity for that partner and build a great deep partnership that helps us to grow our business. So thanks for taking us into that. I've loved spending some time here. I know we went a little longer and a little deeper there, but I really believe that this is one of the areas where entrepreneurs fall short, and they could grow
Yeah,
their
I agree.
business so much more successfully. They could conquer the chaos by getting out of the rugged individualism and partnering up with somebody that's already got those customers that they can get to and deliver value for the customers and the partner. So thank you so much for taking us into that. I always like to ask, is there any last bit of advice that you would have for our listeners as they're, sometimes mired in the chaos as they're trying to grow the business? Most of our customers are not yet at that 7-figure level. Um, Anything that, as you think back on that period of time where you were not yet to 7 figures, we've obviously talked about partnerships, talked about value creation, but anything else that you would leave as a nugget of wisdom for our audience on how to conquer the chaos in that pre 7-figure stage?
Yeah, I think one thing that is consistent. So we've talked about selling and kind of creating process there. We've talked about partnerships, and one thing that's consistent across all of that is, we talked about exposure to the customer, right? Like the most successful thing that I ever did in the early days, I made my metrics the metrics of my customer. And
Mm.
so like that discovery process in terms of like, all right, what is your pain? What's the value that we're going to provide? Let's say like really it boiled down to three things. Like customer acquisition cost, I want to reduce it. Lifetime value, I want to increase it, or I want to launch a new product or service. Like most of our stuff all funneled down into those three use cases, but they've got metrics they're trying to meet. And so this is why sales is not like this dirty process. Like once I've learned those core metrics, that now needs to become a living, breathing thing that is passed from one area of my company to the next. So maybe sales to implementation to customer service, whatever that value chain looks like for you. But that metric needs to stay intact. And when you think about like I'm sure folks have gone through like quarterly business reviews, QBRs, or annual reviews with vendors, and they feel crappy. They feel like I'm showing up to re-explain my business to someone that should be just ingrained in my success. That is the way to alleviate this, is by making your metrics the metrics of your customer. So you brought us on to reduce your customer acquisition cost by 10%. Have we met that goal, right? Like, all right, we're at 11%. What's our next KPI that we need to meet? When I sold LeadMD, we had an 82 customer NPS, and our average lifespan with our customers 4.5 years,
Mm.
which for a
For
services
consultancy,
agency
that's
is
great. Yep.
ridiculous, right?
Yep.
And it was all based around that concept. What did we learn that is your mission critical goal? And then holding everything, keeping that goal front and center. That's the North Star of the business. So I would encourage everyone to think about what your customers' metrics are and adopt those as your primary dashboards for health within those customers.
That's really great. If you're a service business, especially if you're doing a consultancy, many of our customers are doing marketing services of some sort. Making your customer, or making your success metrics the same as your customers, is a great way to get aligned and drive value for
Yep.
everybody. Great stuff. Well, Justin, thank you for spending time with us and sharing your wisdom. Congratulations on the success that you've had, and appreciate your advice on how our customers can conquer the chaos. It's been a great experience to just get reconnected with you and hear about all the good things that you're doing, and love what you're doing to empower entrepreneurs. That's obviously near and dear to our heart here at Keep, and what we do to help customers conquer the chaos. Thanks so much for being on the podcast. Thanks, everybody. Keep growing.